So foreclosure filings fell 8% last month, which makes for the fourth straight month of decline. But many homeowners are still in trouble. In fact, 21% of homeowners still have mortgages that are underwater. Some, though, are getting some good deals from their banks that are helping keep them in their homes. Here to tell you about this is the Watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
Alrighty, so we are seeing some deals being offered either through the bank or through government programs where we're seeing like 2% mortgage rates, or in some cases 0 for 3 years and then 4%, capping out at 4 or 5%. How does this all work?
Yeah, there was a story yesterday on CNN Money, but quite frankly, the story was a little bit misleading. We talked about here on the program, the government program that they set up, this was months ago, makinghomesaffordable.gov, where you'd have to go to the government, they'll help you work your way through, maybe get some principal cuts, maybe get your interest rate cut. Okay. So far, there's a trial period that's set up there. So far, only 31,000 people have actually gotten permanent modifications to their loan. People who have...
Out of millions.
Yeah. Yeah. Well, I don't know the exact number, but there was a decent amount of people that went through that way. You can also go to your lender directly. Banks are in a very precarious position right now. They can't add more bad paper onto their books. Bad paper would be a loan that is defaulted, not being paid.
Right.
So they, more often than not, they rather work out some sort of deal with you where they're going to cut the interest rate, whatever it may be, to try to keep you in that home. And actually, the banks on their own outside the government have modified more loans than through the government program. You have to go through. I mean, in this story, it said, you know, it was headline, 2% mortgage. Some guy got lucky through some program, and he's got a 2% 30-year fixed rate. Now, I know I'm going to be getting the emails, how do I get a 2% 30-year fixed rate? Well, you have to be irresponsible, basically, and you have to get really lucky. If you're not paying, nobody who's been paying their bills on time, nobody that has a lot of equity in their home is going to get a 2% rate. It doesn't work that way. Right. These are taxpayer-subsidized loans.
Okay. So if you are in trouble, though, the best thing, like you're saying, is to go straight to the bank, because it's in their interest to try to get something out of you rather than nothing.
Absolutely. The last thing banks want to have is more paper on their books.
So go in and sit down with a rep at the bank face-to-face and say, look, here's my situation. Yes. What can we work out? Yes. Because I want to stay in the home. I want to, pay my mortgage, but I can't right now.
Yes. You go there first. Go to makinghomesaffordable.gov. But you also have to be diligent. Don't expect it to happen over the course of a day. There's a lot of things that you're going to have to do. There's paperwork that you're going to have to go through. A lot of people are just saying, I don't feel like doing it, and they're letting the paperwork go by the wayside, and they're not getting that modification.
Okay. Call to action there. Appreciate that, Chris.
Was this the way you used to shop?
Okay, Betty. Got your charger plate?
I have.
Sure! Yeah.
Well, things have changed. In fact, the Federal Reserve says Americans have reduced their borrowing for a record 9 months in a row. Is this a permanent change? Here with more on the future of debt is the Watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning. Kudos, America. Good job.
I know, we got it down.
Hey, bravo.
Do you think this is a permanent change, though?
I hope so. I mean, we tend to, the society of cycles. Everybody starts feeling comfortable. They start getting out of control. And I happen to be involved in the business of handling people's money and trying to set up their financial plans. And one of the things we do is we try to set people up a plan that's goal-centric, trying to go ahead and meet your goals and the importance of time spent with others. And unfortunately, people, when they buy all sorts of stuff and their satisfaction comes with owning things, it's an unfulfilled life, and your stuff ends up owning you.
Absolutely. Keeping up with the Joneses,
yes.
It's a big problem. 2 years ago, Americans borrowing 136% of their annual income. I can't even fathom that. What the heck was going on?
I told you the story. I had people coming into my office. They want to get, start planning for their kid's retirement or their daughter's wedding or whatever it may be. And these people, nice suit, nice watch, nice job, nice car, nice house, $80,000 in credit card debt. And I said, I can't perform magic.
What can you do?
I mean, I'm not going to show you greater returns than this 25% you're paying on your credit cards. You've got to pay this down first before you start to save. And it's part of the issue. And I always tell people time is the most important thing we have. Time with our loved ones, the ability to do things. You want to have that. And you want to cherish that. And you do that by not having a lot of stuff and saving your money.
Sure. And you also want to be able to retire. That's an important thing. We're almost out of time. Seconds left. Once we get out of the recession, what is your advice for people so we don't get back in that cycle of borrowing too much?
Pay yourself every single month. Almost make it like a bill. Like you have to pay the electric bill every single month. Say it. I said a certain portion of money every single month that is to you.
Good stuff.